Hello and welcome to Business Standard. Here's a glimpse of the views expressed on the web pages of Business Standard this week. In his weekly column National Interest, Shekhar Gupta writes it's a challenge to decide which institution has declined over the recent decades, the police or the judiciary. But today, if you're someone the powerful don't like, they can easily find police officers to file a case with serious sections from IPC, even if there's no evidence. You might still think, certainly, they still have to produce me before a magistrate who would easily see through the police case that's thin on evidence. And once the magistrate sees that, the order will be determined by that immortal line from the legendary late Justice B.R. Krishna Iyer, "Rule is bail, not jail." Contrary to our belief that Krishna Iyer line wasn't immortal. If anything, it's been murdered and cremated routinely and at least 3 times in recent days. The cases of 3 very young and vocal people, Munawar Farooqi, Navdeep Kaur, and Disha Ravi, stand testimony to this, Gupta writes. In his weekly column for Business Standard, T.N. Anand writes that while Xi Jinping's announcement that China has abolished absolute poverty is a significant event and China is now 10 to 15 years ahead of India, the latter has been making progress as indicated by its steadily improving score on the Human Development Index. India is no longer the country with the largest number of absolutely poor people, and the latest economic survey has pointed out by using a bare necessities index. The picture has improved quite noticeably in recent years. While other metrics either present a less positive picture or are hard to track, what should concern India is not just this emerging picture of a loss of momentum, but also the fact that the country is not outpacing countries that are not even remotely like China in their record of growth and development. Nayan concludes by saying that this is something to think about as the country heaves a sigh of relief over a return to growth after 2 quarters of economic decline. In his weekly column for Business Standard, Mahesh Vyas writes that the Indian economy has surprised analysts and investors with its quick recovery. Growth has turned positive in the 3rd quarter. India got this recovery for free, Vyas says. The recovery did not come at the cost of heavy fiscal spending or huge investments by the government or the private sector. Sustaining the recovery is easier when households feel positive about their well-being. Typically, Indian households are optimistic of their future despite the current economic condition. If households remain hopeful of their future, they're likely to spend and help in the recovery process. But this cannot be taken for granted. Just like the government has now started motivating private companies, it's important that it recognizes the value of maintaining the sentiments of households to sustain the free recovery ride we've had so far, Vyas says. The centre's increasing dependence on the oil sector for its tax revenues has serious implications for the proposed reform to include petrol and diesel under the GST, writes A.K. Bhattacharya in a column for Business Standard. In contrast, the states will have to worry far less. In other words, collections under central GST will take a bigger hit than those under the state GST. This is because in any case, the states are not as dependent on the oil sector for their tax revenues as the center is. Conservatism on oil taxation efforts will strengthen the state's demand for inclusion of petrol and diesel under the GST regime, just as the center will be a little reluctant. Yet another round of tough negotiations from the states with the center on the question of including petrol and diesel under the GST can be expected, writes Bhattacharya. In a column for Business Standard, Ajay Shah says many in India are coming closer to the tipping point where it will become important to stay on top of the cryptocurrency space and think about how it could impact their work. For individuals and firms, cryptocurrencies will open up new concepts in transactions and holding liquid balances. For financial firms, cryptocurrencies will become more important as users will demand associated financial services. For the IT industry, there will be export-oriented IT services work, which will require familiarity with contemporary tools and concepts. Finally, there are possibilities for Indian scientists to innovate on a global scale. Cryptocurrencies have induced aggressive responses from many in India, but this genie will not go back into the bottle, Shah writes. In a column for Business Standard, TCA Srinivasa Raghavan writes that a huge fuss is being made about higher fuel prices by the opposition parties. But what we cannot ignore are 4 simple facts. 1. Petrol prices in India tend to double every 10 years. Often they do so suddenly. 2. Over the past 50 years, the rate of taxation has varied between a low of 48% and a high of 58%. Within this, the share of the center has been remarkably stable at about 40%. Third, as the International Monetary Fund tells us, the vast majority of countries use and have always used petrol taxes to increase revenue. Lastly, this is the fourth time since 1947 that petrol prices have risen so sharply. On each occasion, there was a loud protest, consumption declined for a few months, then it went back up and kept rising till the next big and sudden increase. These four facts are why economists are not supporting the opposition on this issue. They know the government is right, Srinivasa Raghavan writes. There is no question now that Indian authorities had become overconfident about the slowing spread of COVID-19, writes Business Standard in an editorial. Many weeks of declining cases seemed to have lulled the authorities into assuming that for whatever reason, India would only have to tackle a single wave of the pandemic. But in states such as Maharashtra and Kerala, which are more exposed to the world, given the global links, cases have begun to rise again. The renewed threat of another wave is a reminder that until vaccination has reached most of the country, the pandemic will remain a big threat to lives and livelihoods. The editorial says the vaccine rollout must be sped up immediately, regulatory clearance must be granted to additional vaccines already in use elsewhere, such as the highly effective Pfizer vaccine, and the vaccines must also be brought to the private market. Business Standard in an editorial says, Prime Minister Narendra Modi's defense of the private sector in Parliament earlier this month included a critique of the practice of appointing bureaucrats to head public sector undertakings or PSUs. Describing private entrepreneurs as wealth creators, he wondered what could be achieved by handing the nation over to government officials. Modi said, just because somebody is an IAS officer is running fertilizer and chemical factories to airlines. Removing bureaucrats from the scope of corporate management, he went on, would open up opportunities for youngsters to prove their abilities. There's some merit in Modi's suggestion, assuming most of PSUs will eventually be privatized under the new policy, the editorial says. Business Standard in an editorial says, the outage at the National Stock Exchange or the NSE on Wednesday highlighted weaknesses in India's financial trading infrastructure. The NSE now needs to coordinate with market regulator SEBI and figure out what happened, if possible through an inquiry committee that's independent and headed by external experts. Those findings should then be published transparently and steps should be taken to avoid a repeat. The NSE and SEBI also need to find ways to make sure there's clear and unambiguous communication to investors in case of any future disruptions. The NSE is one of the largest derivatives exchanges in the world, which processes contracts worth tens of thousands of crores daily, which makes sound disaster management critical, the editorial says. Business Standard writes in an editorial that since N. Chandrasekaran took the reins at the Tata Group 4 years ago, the firm's market value has doubled and a start has been made towards harmonizing its businesses. But a great deal remains to be done. The flagship companies in particular will have to change their growth models. Tata Motors has led the way with JLR's promise to take Jaguar all-electric in 3 years. The group also reportedly intends to get into mobile component manufacturing, and Tata Power has to focus on building out renewable, where it is seeing solid earnings growth. The group is also getting into online retail through a majority stake in Big Basket. But all this will, at least in the short term, mean more investment. The question going forward is, how different is the spending and reconstruction spree from what happened in the past? Much will depend on how much investors trust Chandrasekaran to make the right calls about the future of the broader economy, the editorial says.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.